Hello everyone. Today we're going to take a look at how to do a bank rec. And I've chosen the Ayers Associates problem on 213. It's our mid-chapter summary problem in chapter 4. And that's on the left of your screen. On the right of your screen is a little format, a little diagram I put together. Lots of times in accounting, it's just picking the right format to address the problem in. So this is how I usually address problems in terms of bank recs. Okay, so we're going to take a look. We've got the top of the screen on the left. We have the cash account, the general ledger or T account for cash for Ayers Associates. And you notice their ending balance for February, I assume we're doing February, was $4,095. So I'm just going to type that in our diagram. This are two things we look at. What's the book balance and what's the bank balance? So the bottom of the left-hand side is the bank statements for Ayers Associates. So the ending balance here is $3,070. Okay. So it says we're supposed to prepare a bank rec, do the journal entries. We can handle that. So what's next? Well, we need to know, which checks are outstanding, I guess. Or I guess we should take a look at one way. Let's go from the bank. Deposits not on bank statements. So do we have any deposits here? Or not on, not on bank statement. Let's see, cash account, we've got balance, looks like we got some changes here. Looks like we might have had a few, let's see, well, let's take a look at the end of the month. Total deposits, so, okay. So we have $800 deposit on the bank statement, and that looks like it was on the 7th. So we went up $1,000 surprisingly here. What else? We have $1,800, and we have some from the 24th. Wow. So it looks like there's 3 deposits. This is going to be pretty tricky. So looks like a totally different problem. Oh, here we go. Oh, okay. Well, we're going to take a look at the debits of the cash account. There's one on the 28th for $2,400. So I don't see that one on the bank statement. So that looks like it's a deposit in transit, one that's not on the bank statement. So I'm going to add $2,400 to the balance per bank on the bank side. Then we're going to take a look at checks, and it looks like we've got some checks on the bank statement for $3,100 and $1,100. But these last 2 credits in the general ledger, they're probably checks. $500 and $1,400 are not, or $500 and $900 are not on the bank statement. So I'm going to figure that those 2 are outstanding checks. So we're going to put $500 down, $900 down. Looks like that's a total of $1,400, and those get subtracted from the bank balance. So these are so far just timing differences. The deposit didn't hit the bank by the end of the month. These checks didn't clear the bank by the end of the month. And so far, we're looking okay. I don't see any adjustments. So let's see other items. We got a few things. NSF service charge, NSF check, bank collection of notes, monthly rent expense, EFT. I don't know what the heck that is. So that looks like it's another bank charge, and interest earned. Well, that's always a good one. We like to get some pluses. So it looks like this may be all our bank reconciliations. Had the bank made an error on the check, say for example, this one check for $1,100, if we looked at the bank statement and it said $11,000, wow, that would be probably, or hopefully, that would be a bank error. That would give us a whole heck of a lot more money, but that would be an error and we'd have to call the bank. Okay, so that would be an example of a bank adjustment. So let's see where we're at on the bank side. Adjusted balance for the bank is going to be the balance for the bank statement, $7,030, plus our deposit in transit. Hopefully I got a plus here. Do I have a plus? Yeah, I do have a plus. And we're going to subtract, oops, actually I'm going to add because I got a minus in front of it. I'm going to take away our outstanding checks. So it looks as though our adjusted balance for the bank is $4,070. Okay. All right, then we're going to go over to the book side. So we're starting with this cash balance, $4,095. Do we have any deposits not on the books? Well, let's see. Bank collection of note receivable for the company. So that looks like one of those. $1,000. So I'm going to add that in. We're going to have to adjust our books for that. Bank fees and charges. Wow, this bank is going crazy. So they've got minus $10 for a service charge. We've got NSF check. That's a bad one. $700. I'm just going to put NSF so I remember here. And we have $330. Looks like a EFT, electronic funds transfer. And that's like a monthly recurring payment, I guess. And that was for rent. Okay. And, we have some interest too. That was a plus. So it looks like we earned some interest. So we're going to add that into our book total as well. So all these things showed up on our bank account, so they belong to us, but they didn't show up on our general ledger, so we're going to have to adjust for those. Okay, I'm going to click the summation key here and add all this stuff up, see where we're at. Oops, and I'm off $5, so I screwed up somewhere. Oh, this is, it's $15 interest. Sorry. All right, so we got $4,070 adjusted balance for the books. So our adjusted balance for the bank and for the books is the same amount. Everyone see that? Okay. The last thing we have to do is make journal entries to adjust all the balances that are on the book side. So we've got a couple here. I'm going to probably have to go down to do it. So I'm just going to do them all separately like your book does. Or maybe I'll do them together. We have two pluses. So we're going to have to write a general journal entry to debit cash for $1,015. And we're going to credit, what? I think that was notes receivable for $1,000. And we're going to credit interest income for $15. Okay. All right. And then we had a number of charges, a number of expenses. So these are all going to be credits to cash. So we had a service charge expense. Let's just call it service charge expense or bank fee expense, something like that. And we're going to debit $10 for that. We have NSF check. So our customer who we credited their accounts receivable is now going to have his accounts receivable set up again for $700. And we have a rent expense. Okay. And that was for $330. So we're going to credit cash for the sum of those, which looks like it's $1,040. All right, 30, 40. Okay, so that is it. That's how we would put together a bank rec.